All right, Brent, I think we're live. Do you feel like you're walking out onto the set of Jay Leno?
Couldn't, yeah, exactly. Where's the audience cheering for us?
Well, thanks for taking the time to spend a half hour with us. We really appreciate it. As you know, SMB tech is a big focus for us as a firm and a big trend in the tech industry overall. And so we've got a great lineup of folks today who are going to talk about SMB tech, and we wanted to kick it off with you because you've been in this industry for a decade plus, working with small business owners, and now you run one of the more valuable public companies focused on SMB. And just love to hear your thoughts, a little bit of background on sort of, your thoughts on the SMB tech universe, the market, and then maybe tie that into what's happening in the e-commerce space with merchants in the SMB space, both in the US as well as globally.
Sure thing. So I'll start by saying I think the internet is the best thing that ever came along for small businesses trying to sell something. So let me talk specifically about product-based sales. In the pre-internet world, if you produced a product and you wanted to have it sold to consumers, you had to figure out how to distribute it to retailers. You had to go to retailers in your local area, around your state, around your region, the country, try to talk them into stocking your product. You're then limited to basically what inventory they choose to sell, where they choose to put it on their shelves, how they choose to display it. In other words, it was unbelievably hard to get distribution. And if you didn't have distribution, of course, advertising is a total waste of time and a waste of energy. So with the internet, all of a sudden now you can pop up your own store. You can sell to anybody at a minimum in the country that you're in. And if you're a little more sophisticated, cross-border. And it's as easy and free to start advertising your product as it is to start creating really great content and information about what you sell and why it's better. Not surprisingly, therefore, there has just been an unbelievable boom in two types of small businesses. One is pre-existing ones that now have a better chance to tell their story, get it distributed, and kind of go big with it. And then secondly are the digital native startups who never existed before and start from scratch, but with a different product, a different story, et cetera. And it's just been magnificent. I mean, I really started in this area 20 years ago with one of the first SaaS platforms, and then almost 10 years at eBay and PayPal. And of course, eBay was for a long time the easiest, cheapest way for anybody to get up and start selling, even easier than creating your own website. PayPal made it a snap of the fingers to be able to do what used to be extraordinarily hard, which was to get a merchant account from a bank. Try walking into your local bank, Chase, Wells, whatever, and getting a merchant account if you don't have history as a business to sell and take credit cards. It's really tough. And PayPal let people just sign up in 2 seconds, and you're taking credit cards instantly with no fixed fees and an incredibly low rate. So everything has turned in favor and leveled the playing field, in some ways advantaged new companies with new stories to tell relative to the old industry leaders. And one of the things that's been very interesting for BigCommerce is we serve both. We serve the small companies and startups. I mean, that's our origin as an SMB platform. But we also serve the biggest companies in the world as well, like Procter & Gamble and most of its brands. And the other point I would want to make that is so important about what's happened in the last 20 years is this whole notion of disruptive technology. And I don't just use disruptive as a buzzword. I use it in the kind of textbook definition from Clay Christensen, who coined the term. And for him, disruptive technology is always by definition technology that starts by serving SMBs. It always begins by targeting the low end of the market that wants and needs a lot less than what the market leaders are providing. The market leaders become big, they become expensive, they become overbearing. And so disruptive technology is like, I'm going to come up with something that's simpler, faster, cheaper, easier for small companies to use. And then they bring it to market and small companies start using it en masse. That builds scale for the disruptive tech. And then the disruptive tech has the option you don't become disruptive until you start disrupting somebody. And that happens when you add performance, you add functionality, and move up market into the mid-market or even higher. One of the great examples of that is Salesforce.com. I remember when I worked at the SaaS platform Escalate back in, started in 99, 2000. We had like a Salesforce quota bearing of like 6 people, and we were on Salesforce.com. I think Salesforce probably started in 1999.
And it was an SMB product. You're right. You're right.
It was totally an SMB product. Yeah. And now it's serving the biggest companies in the world. Yet if you're a little company, there's a good chance that you're going to get started on Salesforce too. It's disruptive because it just kept adding functionality and extending up, but it maintained its low cost and its ease of use, even for the smallest companies. So you can start on Salesforce and grow as big as you need to grow. That's a great example of disruptive technology. And it's exactly what we're trying to do at BigCommerce. So at BigCommerce, we started serving only SMBs. And then we looked at the mid-market, which was dominated by Magento. Magento's open source on-premise software. But it basically means you need your own little army of expert software engineers and IT people to manage Magento. That's super complex. And we felt like what the world really needed, even mid-market and enterprise, was a much less expensive but powerful, open, and feature-rich SaaS platform. So we ran the classic disruptive innovation playbook. We built lots of mass at the low end, 50,000 SMBs. Then we went after the mid-market. Then we went after large enterprise, and we're serving them all. So any company could start on us at $30 a month, and you're running on the exact same technology that Procter & Gamble and all of its multi-billion-dollar brands is running on, the GE appliances. And you can upgrade, keep growing, and you'll never have to re-platform. It's all the same thing for $30 a month.
Wow. And I mean, it's such a great point. People don't realize, and we think of Salesforce today as serving large enterprise, but you're right. I mean, I remember I had a number of friends who were early at Salesforce, and in the early days, it was all small business. I remember it was like probably the mid 2000s when they announced their first enterprise customer, and it might've been like Cisco or General Electric or somebody like that. So this trend of innovative tech companies in the SMB space then moving up market has been important. How did you guys think about that as you thought of it? Because it's also, Square famously early in its days went and sold Starbucks, realized that wasn't a great endeavor for them and went back to focusing on small business. How did you know when it was the right time to start moving BigCommerce up market and serving more of those middle market customers? And how did you balance that with your SMB base core?
Yeah, our company, I didn't found our company. We were founded in 2009. And, at a time when there was no leading SaaS platform globally. And we took off like a rocket ship. But we had the disadvantage that even though there was no leader, there was somebody who started before us, and that was Shopify, the Canadian platform. It's the one that's bigger than us. We're the second biggest in the world. So Shopify had a 5-year head start. And by 2014, 2015, the founders and the board realized, okay, we're number 2 globally, but they're about to IPO. And we don't really have a strategy to come from behind and beat them. So what do we do next? And they were wondering, do we go down market from S like to freemium? Do we move up market? What do we do? And they knew they needed to bring in a CEO who had experience managing this type of transition before. And I mentioned disruptive innovation. Clay Christensen had been a professor of mine in business school. So I had already implemented this twice before, first at PayPal. And that had a lot to do with PayPal going from being in 2002 when eBay bought them only for eBay and only person-to-person payments. And I took them off eBay into merchant services and took them mid-market and up-market, so that by the time I left in 2010, merchant services and off eBay was like 70% of their business. So I did it there. Then I did it again at HomeAway, which at the time was VRBO, vacation rentals by owner, didn't really serve very much the professional property manager market, but we moved up market to serve them too. So I'd done this twice. And when I came in, I said, well, rinse and repeat. This is the exact same scenario. We were beat to market by Shopify. We're a strong number 2, but we're not going to overcome them. But now let's go disrupt the market leader. And the market leader was not Shopify, it was Magento. Magento was the 800-pound gorilla. It was number 1 for small, medium, and large merchants, B2C and B2B, in every major geography. And just making sure that we're live right now. We're all set to go live. Yeah, I think we're live. So that was really the player that we needed to beat. It was Magento, and so we moved up market and took them on as a SaaS platform. Again, using that same strategy. So I'd done it before, and this market of e-commerce platforms was just ripe for it. It needed to be disrupted because the vast majority of companies don't want to have to be managing their own software and their own infrastructure and their own security. But that's what the market leader, Magento, made them do. So to me, it was
also,
very easy.
I mean, that also
like
happened at a time where, it feels to me like there was also an evolution where we had Amazon and eBay in the 2000s. You hit 2010, sort of online with Wix and Squarespace, and people realized that a majority of their business is going to move online at some point. It was obviously happening in China and elsewhere around the world. We didn't forecast a global pandemic in 2021 or 2020. I certainly hope we're not forecasting one for 21. But talk a little bit about what happened this year, early this year, in terms of the pandemic and how that changed the mindset of every SMB in America and what that's meant for your business and other players in the e-commerce space.
Well, the storyline is that we compete for small, medium, and large, but it was small that skyrocketed by far the most. What happened was when the pandemic began, of course, we were like everybody else, and we had no idea how this would impact our business. Although in hindsight, it should be pretty obvious that a pandemic's good.
We didn't know. I remember board meetings. We didn't know what was going to happen.
We did not know what would happen. And in particular, the first couple of weeks in the mid-March to the end of March, suddenly the mid-market and large enterprise parts of our business, which is selling, in essence, the software for new e-commerce sites to medium and big business, went from strong to, we're in a panic. And a lot of these bigger established companies suddenly put the brakes on all initiatives and are like, well, we've got to transition to work from home. We don't know if we're going to have to lay off people. They paused. And in contrast to that, small business just rocketed out of the gates. And what I'm talking about is not GMV, the actual sales of our existing customer sites. I mean, that went from good to great to unbelievably great to crazy. The sales of companies who were already had e-commerce sites just exploded. But in terms of businesses now adopting e-commerce, buying our product new, it was the small businesses who were caught flat-footed, who were kind of late to adopt e-commerce. Maybe they were over-reliant on store-based sales or third-party store-based sales. And suddenly, if your own stores are down or your retail partners' stores are shut, now you've got to figure out how to sell your goods. And so everybody was rushing in, and they loved our platform because it's SaaS. It's the fastest, easiest way to get going. You can get going in a few hours, really, if you don't have that much to integrate or set up. Or you can get going like that and just keep adding things in. So what we saw is, in the early days, a doubling, even sometimes a tripling of the rate of new store openings, e-commerce store openings. And the final thing that was really provocative to us, we have 3 SMB plans. We've got a $30 a month plan, an $80 a month plan, and a $300 a month plan. And normally, of course, you see by far the most sales of the $30 a month and then $80. And there aren't that many that buy the $300. A lot of companies will just skip up to enterprise. Of those 3 plans, though, in the pandemic, the one that skyrocketed the most, and to this day is still the most overperforming, is our $300 a month plan. And the theory we have is that not only are there a lot of SMBs buying it, but there are also an awful lot of mid-market companies who don't have the time right now to go through what they might have historically, like a requirements definition, an RFP. They don't have the time to go through a contracting sales negotiation. They just want to rush in self-serve with the most feature-rich plan they can buy. And so, if you are SMBTech, sometimes you'll be surprised in times like this and see even an awful lot of mid-market or enterprise customers coming in and buying your most feature-rich SMB product or plan if that really suits their needs at the time.
Yeah, that's a counter to, I would not have expected that. And I mean, it is so interesting that you probably had literally millions of merchants who had been putting off for years investing heavily in an e-commerce operation. And all of a sudden in February and March said, we don't have a choice. Like our physical store business is dead for some period of time. We got to shift our focus online. Not sure we've ever seen anything like that. At least I haven't. I've been in Silicon Valley since 1995. I've never seen anything like it.
No, it's been crazy. And it's also forcing a lot of companies who might have partially adopted e-commerce, let's say for a certain brand or a certain segment like B2C, to now realize, oh, they've got to do it for all their brands, B2B and B2C, all their geographies. And so what could have been like one or two sites historically becomes a whole bunch of different initiatives, one after another, as they add the bandwidth to take on new projects.
Crazy. And let me shift gears a little bit and talk a little bit more that we've got a mix of folks tuning in who are, SMBTech customers. So they run small businesses. We've got folks that are entrepreneurs. We've got investors, but everybody at some level is working in a company. Can you talk a little bit about how this time window, you've been running companies and an executive in Silicon Valley for a long time. How have the last 9 months been different for you as a CEO and for you with your leadership team? And are there things or kind of piece of advice that you could pass along to folks that are listening on how to handle some of the, intangible issues that have come up over the last 9 months, emotional and cultural and organizational, and just for you personally as a leader, how have you digested it and kind of planned out your days and weeks differently?
I'm sure every person dialing into this call in a leadership position has ridden a crazy roller coaster over the last couple of months. And, you've had a front row seat and next to me on the roller coaster that we've ridden. I won't go into the details on our specifics, but what I will say was a realization for me maybe 2-3 months into the pandemic, and I was getting hit by the third or fourth surprise that I had to deal with. I remember reading a couple of years ago, as people were talking about grit and resilience and perseverance. I remember reading a couple of years ago the book Anti-Fragile, and that book was written after the Great Recession by Nassim Taleb, I think something like that. And the whole argument in Anti-Fragile is that the goal in life, the goal as a person, the goal as a family member or as a family, the goal as an organization, the goal, frankly, with societal institutions, should be something that there's no English word for. And the argument is when things are under pressure or stress, if they are structured in a way that's likely to break, that's being fragile. And what are examples of fragile? Well, he said the last Great Recession was fragility because the economy had far too much debt all over the place, and not just debt, but leveraged debt. And that means when one part of it fails, because everything else is highly leveraged, it does not have the strength to resist also failing. Everything was fragile because there was too much debt. And I would argue that our reaction to this pandemic, although it's hardly the first infectious disease society has ever faced before, we as a society and as a country and as a planet have reacted in a thoroughly fragile way. We were not resilient. We were fragile. We broke. The economy broke. Our human relations broke. Our response broke. It's not a proud time for humanity. But the better option isn't resilience. Resilience and perseverance simply means you keep doing what you're doing and you're strong enough not to break, but you don't really overcome. You just persevere and you outlast. That's not the goal. The goal is being anti-fragile. And the definition of anti-fragile is when stressed, you actually get stronger. An example is your own bones and muscles. If you exercise and you don't overdo it, your bones get thicker, your muscles get stronger. In response to stress, they become better. And coming back to the question, my attitude throughout this whole thing was every time I confront a new challenge, rather than say, woe is me, or I didn't sign up for this. It was to instead overcome it, learn from it, and become stronger as a company, as a family. I think my family has become a lot stronger and closer together from this forced time together and having to adapt and, help each other through all of this stuff. My management team has. And as an example of what does stronger look like, ironically, one of the muscles that I've tried to teach myself and the management team to strengthen is the muscle of forgiveness and grace. Because a lot of people are stressed, and if they bring that stress to work, especially in a remote interaction environment, which encourages bad passive aggressive behavior, people will do things and behave in ways that are not normal for them.
Yeah.
And the right response to that is, one, have no tolerance for it, kind of call it out and say, here's what you're doing and here's why it's tough on the company. But then practice grace and forgiveness and say, and that people will own up to it and say, oh yeah, that's not me. I'm sorry I did that. And you forgive them. You don't let the grudges build. You don't let the animosities and the passive aggressive spiral out of control or infect parts of the organization. You call it out, you address it, but then practice grace and forgiveness, because that's what people need most in this time. Inevitably they will have outlets for stress that are unhealthy. Call it out, don't tolerate it, but instantly ask for forgiveness, give forgiveness. And that, kind of that muscle of grace and forgiveness is a really powerful one in organizations dealing with all of this.
Yeah. Another book I'd recommend is there's a book called The Upside of Stress. I don't know if you've read it, but the author makes this terrific point that, like, the reason you're stressed is because you've put yourself in a position to be successful that has some risk, whether it's having kids or running a company, and so your body's natural reaction is to kind of move into this sort of fight or flight mode because you've put yourself in a stressful situation. But if you acknowledge that it's stressful because you've put yourself in that situation, it's much easier to deal with. So it's a great book. I'd highly recommend. Speaking of that, I want to get to two questions. We only got 7 minutes. One is, as you look out over the next 3 to 5 years, I mean, obviously next year, I believe we're still going to have a huge tailwind from all this tech adoption and things like e-commerce. But as you look out over the longer run, what are some things that get you excited about the category you're in? And I'll sort of merge that as SMBTech and e-commerce.
Yeah, so I am most excited about creating, kind of the first SaaS platform in the world that any company, no matter how small, can use to create as many stores as they want on it out of a single account, different brands, different geographies that they want to sell into, B2B, B2C, do that all within one platform at a very low price. Because historically, you'd have to spend a fortune on Magento or Salesforce to get that kind of capability. So I'm super excited about that. I'm super excited about global expansion. We as a company, we were founded in Sydney, Australia. So we're very strong in Australia, New Zealand. We're now headquartered in Austin, Texas. So of course, we're strong in North America. And our business is absolutely booming. Arguably, even the highest performing part of our business is out of the UK and Northern Europe.
Yeah, we didn't even get to touch on that, but I know.
Yeah, but as somebody who's run, PayPal Europe for 4 years and HomeAway was vacation rental websites all over the world, I am so excited about continental Europe and Eastern Europe and the Middle East and Africa and Latin America and Asia. And we've got growth initiatives in all of those regions that we're starting to pursue. So it's the global opportunity I'm super fired up about too. And then finally, I just think that the pandemic makes clear to everybody, e-commerce, including buy online, pick up in store, buy online and local delivery, really is the future. And the future's coming to us a decade or more faster than we might have thought it would. And we want to be the platform that powers that in all of its best use cases, including the really cool ones. Like, if you need to visualize, in sort of artificial reality, what a product you're considering would look like in your home, working with the partners who are best at that, so a website can deliver that functionality. It's just, there's so many different great use cases. We want to be the platform that solves those.
Yeah. We always like to say there's 7.3 billion people in the world. There's only 330 million in the US. So, you think about that international opportunity and people getting access to banking and credit and e-commerce tools. I mean, that opportunity to me for the next few decades is just going to be, it's going to be incredible. We're just scratching the surface on international. So lastly, you are the CEO of a company that went public about a month and a half ago, very successful IPO. And one of the things that is always confounding to me is there's this narrative in the market that it's not great to be a public company CEO. So I'm going to surprise you with this question. How are you liking being a public company CEO?
Oh, it's the best thing ever. The advantages are massive for our company, and I can't think of any material disadvantages. The most important advantage for us is by being public, it is the credibility and confidence it gives to a business who's evaluating our platform to know that they're on something they can count on for the long haul. If you're a private company and a customer doesn't have visibility into your balance sheet, your growth rate, your strategy, your size, your strength, it's a big leap of faith. I mean, they've got to really be overconfident that you so much better match their needs and requirements than a more well-known or established competitive alternative. And now we deliver that kind of strength and confidence. And we've got 500 competitors around the world, but our top 5 are well-known, capitalized public companies. And we've now just leveled the playing field. It used to be the case that we would do amazing things. We'd issue a press release and nobody would care. Right? Now, when we issue a press release, every person who considers investing in SaaS software or e-commerce pays close attention. What did they just say? What does it mean for the business? Is this a needle mover for the company? And so all of our actions matter so much more to what the world cares about today than they did when we were private. And that's the second biggest benefit. So the first is credibility for your customers and partners, which is really important because if they're betting their digital future and transformation, they want that and might avoid your product without it. And the second is the coverage and the awareness of what you're working on. So I would say to anybody, if you've got the vision and the motivation and the energy, because it's a lot to get to this point and then to keep managing it, and you would rather go into the ring each and every day, right? And maybe get beat up a little bit, but get stronger from it. Going public is so much better than, the alternative, which is just kind of selling out, cashing in, and, doing something else. I mean, to me, this is a career highlight. Like I'm having more fun than ever before, and I want to keep doing this for 10 years or more.
Yeah, I mean, we're what, 2 months in? 3 months in, 2 months in, I guess. But it's, and it'll be a long journey. I know you want to do this for a very long time, and it's just, it's been fun to watch, and we're thrilled to be part of it. Thrilled to back you and the team. It's also been, I would add a third benefit, which is I think it's been a huge cultural boost for your team. I mean, people just feel like the company has vaulted into a different stratosphere in terms of what you guys, the opportunity you have in front of you. So we're lucky to be part of it. Thanks for sharing everything with us today, Brent. I know we got a lot of folks online who appreciate hearing your thoughts. And thanks for taking the time.
Thanks for being a phenomenal investor and board member, Jeff. It's been a great ride so far with you, and I know much more to come for us.
Awesome. Thanks, Brent.